This week in the world of semiconductors, one question stood out. When are record results not enough? ASML, the critical Dutch supplier to the chip industry, posted blockbuster order numbers fueled by an unrelenting AI boom. Yet after an initial surge to new highs, its stock price stumbled. Was this a momentary pause for a stock that's seen a massive run-up? Or a signal that even for a company at the heart of the AI revolution, valuations can get stretched? Welcome to TickerWatch News for ASML, Week 7, 2026. This week, we're diving into the latest developments for ASML, a company whose technology is indispensable for manufacturing the world's most advanced chips. We'll cover the record-breaking quarterly results, a massive new share buyback program, and the company's central role in Europe's push for semiconductor independence. Stock snapshot. It was a volatile week for ASML shares. After a strong run-up in recent weeks, the stock saw significant price swings following its latest earnings announcement. While it outperformed many of its peers over the past month with a gain of over 11%, the last 7 days ended with a slight decline of about 0.3% on the Euronext Amsterdam exchange. This performance contrasts with the broader computer and technology sector, which saw a decline over the past month. High investor interest remains a constant, with average trading volumes indicating the stock is being closely watched. The week's price action suggests that while the long-term story is compelling, investors are actively debating whether the current valuation fully reflects the good news. Top news and headlines. The biggest story of the week was ASML's fourth quarter 2025 earnings report, which painted a very strong picture of current demand. The company announced a record-breaking quarter for new orders, taking in $13.2 billion in new bookings. That figure was more than double what many analysts had anticipated and was driven by intense demand for its most advanced extreme ultraviolet lithography systems. Full-year revenue for 2025 reached $32.7 billion. This momentum is expected to continue, with ASML raising its 2026 sales guidance to a range of $34 to $39 billion. Management directly linked this surge to the build-out of AI infrastructure, as customers like TSMC, Samsung, and Intel are ramping up investments to meet AI-related demand. Alongside the powerful earnings report, ASML signaled strong confidence in its financial future by announcing a new $12 billion share buyback program set to run through 2028. This move to return a significant amount of capital to shareholders came on top of a 17% increase in its proposed annual dividend. For investors, a large-scale buyback program paired with record orders suggests that management is comfortable with its cash generation and sees this demand as durable, not just a temporary spike. Shifting focus to Europe, ASML solidified its strategic importance by deploying its first next-generation high-NA EUV system in a new pilot line run by research hub IMEC. This installation is a cornerstone of the $2.5 billion Nano IC project, a key initiative under the EU Chips Act designed to bolster Europe's semiconductor capabilities. This development places ASML's most advanced technology at the heart of the continent's push for greater chip independence and cements its role as a critical partner in government-backed technology policy. Finally, in a move that might seem counterintuitive alongside record growth, ASML announced a corporate restructuring that includes cutting about 1,700 positions, or roughly 4% of its workforce. The reductions will primarily affect management and IT roles. The company framed this not as a response to financial pressure, but as a strategic decision made from a position of strength. The goal is to streamline operations, reduce organizational complexity, and sharpen its focus on engineering and innovation to remain agile as it scales. Market reaction and investor sentiment. The market's reaction to ASML's blockbuster report was complex. Initially, the stock shot up to new record highs, but it reversed course to close down about 2% on the day of the announcement. This sell the news event suggests that the stock's strong rally leading up to the report had already priced in very high expectations.
However, analyst sentiment remains overwhelmingly bullish on the company's fundamentals. In the wake of the report, several firms raised their price targets. Bernstein lifted its to over $1,900, viewing the price dip as a buying opportunity. Barclays upgraded the stock to overweight with a €1,500 target, and TD Cowen matched that figure. The consensus on Wall Street approximates a strong buy, with many analysts arguing that any weakness is a chance to get into a company with a near monopoly on a critical technology. The broader narrative, however, is now a tug-of-war between stellar fundamentals and a rich valuation. Headlines are increasingly questioning if the stock has risen too far, too fast, even as the company's role in the AI boom becomes more critical. Technical and fundamental check-in. From a technical perspective, ASML's stock continues to show bullish signals despite the recent volatility. It recently moved above its 20-day simple moving average, a positive short-term trend indicator. The momentum over the past month and quarter has been exceptionally strong, placing the stock in a clear uptrend. On the fundamental side, the conversation is dominated by valuation. ASML currently trades at a price-to-earnings ratio of around 48, a significant premium to the broader semiconductor industry. Multiple valuation models based on discounted cash flow analysis suggest the stock may be overvalued, with some estimates putting the share price more than 50% above its intrinsic value. However, this is countered by powerful growth metrics. The company has a Zacks rank of number 2, indicating a buy, supported by a growth score of A. Analysts project earnings growth to exceed 20% this year, fueled by the insatiable demand for AI chips. This creates the central debate for investors. Is ASML's unique market position in AI-driven growth worth the high premium? What to watch next week? Looking ahead, several key themes will be important to monitor. First, keep an eye on capital expenditure announcements from ASML's major customers. TSMC's strong spending forecast provided a major tailwind, and similar guidance from other chip makers would further bolster ASML's outlook. Second, the adoption rate of the new high-NA EUV systems will be a critical catalyst. Watch for announcements from chip makers about moving this technology from pilot projects, like the one at IMEC, into high-volume manufacturing. Key decisions on this front are anticipated in the second half of this year. Finally, the geopolitical landscape remains a factor. The impact of export controls on sales to China will be a key metric to follow, as revenue from the region is expected to normalize and decrease as a percentage of total sales. The bull case for ASML hinges on sustained long-term AI demand, driving even more orders and accelerating high-NA adoption. The bear case would involve a slowdown in AI spending or tighter export regulations, which could cause the stock's high valuation to contract. In the near term, the most likely scenario may be a period of consolidation as the market digests the stock's incredible run and weighs its bright future against a demanding valuation. Thank you for tuning in to TickerWatch News for ASML, Week 7, 2026. Please remember, this podcast is for informational and educational purposes only and is not intended as financial advice. Be sure to subscribe, leave a review, and share this episode with anyone interested in the semiconductor space. We'll be back next week with more updates.